What's up, guys? My name is Yonas Tekeste. I'm a doctor of physical therapy. I started Rate My Therapy company about 4 years ago, 4 or 5 years ago, just to give therapists an idea of what's a good company and what's a bad company. I remember I worked one skilled nursing facility. It was a travel contract. It was not good at all, but I had no clue. And then I found out when I got there. So this Facebook group, this community, the goal of this is to improve transparency so clinicians can choose better jobs because there are good jobs out there. I've worked over 20 jobs as a travel PT and I've seen good jobs. So they're out there and I want you guys to share more and to learn more, to share more of the knowledge. And today I'm actually doing a topic on travel tax-free stipends. There's a lot of questions about it. And if you guys have questions, you can just ask in the Facebook group or ask on Zoom. And this is going to be posted on my YouTube, Travel Therapy with Jonas. So you can post questions there, but this should be really quick. We're just going to talk about tax-free stipends, and I'm going to go through different scenarios. So as a traveler, you get tax-free stipends. You get paid by the hour, and you get paid with tax-free stipends. So I even have a sample contract that I made. So this is like a sample contract where it looks like I actually talked about this last week. I broke it down, but you get paid by the hour. So typically there's like a regular rate, there's an overtime rate. This is low, but it should be higher. And then you get tax-free stipends. You get a stipend for your housing and for your meals and incidentals. So that's tax-free. Typically it's per day that you're working as well. But stipends are not wages, they're reimbursements because as a traveler, we're supposed to be duplicating our living expenses. So you're supposed to have a tax home as well. And that's why they're tax free because essentially we're traveling somewhere new. So we're paying for the rent where we're going to for a travel contract and you're paying for your tax home. So that's why we're able to get this benefit of a tax free stipend. It's actually pretty good, but you have to be tax free to follow the rules because you don't want to get an audit. It it's unlikely it'll happen, but I know a few travelers where it did happen to, and I've met a lot of travelers. And in the future, we're going to bring on a tax travel specialist. So stay tuned for that. But essentially, you need to have a tax home requirement. So you have to maintain a legitimate tax home to receive tax-free stipends. So something like if you're paying rent or mortgage at the home, you return there regularly, or if you have ties to the area. And that's very important. And a lot of agencies, a lot of recruiters, they don't know this. They're not tax professionals, so they should know this. I'm not a tax professional. So talk to a tax professional if you have questions. But it's very important just to have a tax home so you're complying with the IRS because no one wants the IRS on their back. You want to make more money as a traveler and do what you want, travel, invest, but you don't want to have to pay it back or have any issues. So that's a little bit about that. And this next, we're going to talk about ways to find out if you're getting the max tax-free amount, because essentially you get paid an hourly rate and then a tax-free stipend for your meals and for your housing. But you have to, a good thing to do, I always check is what's the max amount that I'm getting paid tax-free. So there's a website called GSA.gov. And then there you can look up your max tax-free stipend. So when you go to the website, you go to per diem lookup. And I used to live in San Francisco in Potrero Hills. So one zip code was 9417. So I'm going to put this up to search my zip code because different areas have different amounts of tax-free stipends. Excuse me. So typically, if the area cost of living is higher, the tax-free stipend's higher. If it's lower, like in a small town in Kentucky, the payment will be lower. And that's a seven at the bottom. 94107. Why is that? Oop. Let me do that again. So 94107. And then we'll do it for this year, 2026. You can also put in the start end date. You can also put in your exact city and location, but I'll just put the zip code for now. And you click search, and then you can separate it by the year, which is pretty cool. I actually didn't know that. That's a new feature, I think, in the government website. But this is the daily lodging or the housing rates for the stipend, and this is the meals and incidentals. So essentially, the max amount in San Francisco, it'd be the number times seven because you're typically there for 7 days. So you do 272 times seven. I'm using my calculator, which is 1904. That's a lot of dough. So let's just say 1900, and then 92 is the meals and incidentals. So we're gonna do 92 times seven. So that's 644. So I'm gonna do 644 plus 1904. So the max amount in tax-free stipends that you could be getting is 2548, $2,548. And that's outside of your hourly pay. That's just the tax-free amount that you'll get if you work in that area if it's maximized. So that's amazing. And a lot of the times your hourly pay is going to be like between like 20 to $40. It just depends on the bill rate because all of these numbers, they all come from the bill rate. And what you want to do is you want to try to lower the hourly rate as much as possible to maximize the tax-free stipend because you want the tax-free money as much as possible. And if you guys have any questions, feel free to reach out. But it all comes from the bill rate. And one thing you want to do is you want to be careful. And most agencies don't do this, but they won't lower your hourly rate too low because there's a thing called wage recharacterization risk, where essentially if your hourly rate is too low relative to what a worker would get paid for the field, it's a red flag, and the IRS might say, "Hey, you're bringing that too low." So you're just to shift things. So you want to follow the rules and be compliant. But typically, most agencies don't pay physical therapists lower than $20 because that's too low. So it's good to know in general just what's the max stipend amount to see if you're getting the max amount. Because typically you're going to get a pay package from your recruiter. They should break it down. What's the hourly rate and the stipend rate? And then you want to ask them if it's not maximized, if it's not the max amount, can you decrease your hourly rate as low as possible to where it's not too low, most likely below $20, just so you get as much money as possible. Uh, Another thing that you can do is let's say for your housing stipend, if you can't find housing and if you want to use the agency housing, they can literally take your full housing stipend, which here it was 1904, and then they can find you housing. And I don't do that. I've actually never done that because I like to keep as much of my stipend as much as possible, but it's possible for the agency to find housing as well. They'll just take your stipend and find the housing. I don't think that's wise. It's better just to find it yourself and keep the money. There only was one case where I let the agency find housing for me. That was when I worked a strike contract where PTs work a strike. You essentially just get paid by the hour, and then they pay for your flights and your hotel as well. And there really wasn't an option, and it makes the most sense because they transport you. And another tip about stipends, it's kind of a tip about pay packages, but and I'll go to the sample contract. So you can even ask for reimbursements. Like for example, this $3,000, I actually asked for that for a past travel contract, and how I got a reimbursement was that big was because I essentially asked the recruiter to lower my hourly rate, and then they were able to put the hourly rate combined over 13 weeks, a part of it into the CEU reimbursement. And I actually took a lot of courses, so this was legit. But essentially, this allows you to get a big payment up front, and then it's also tax free. So essentially, you want to get as much money up front as a traveler. If there's a reimbursement, it's always good to ask to get paid up front versus towards the end of your contract because you want the money now because money is more valuable now than in the future. And if you have the money now, then you can invest it, and that investment can grow more and more. It can compile. Let me know if you guys have any questions, if this was helpful. I'm still doing a 16-week series, so every week we're doing these calls and talks. Have a good rest of the day, guys.